Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to be talking about one of the best trade setups in the playbook called the Day Zero trade setup. This is a parabolic trend trade, Day Zero. And coming back to understanding, putting the pieces together, stepping back and allowing the market to set up for a best trade setup, recognizing when an instrument is not set up and removing that from the basket that you're following on the day, and narrowing it down to 2 or 3 instruments that reflect a potential best trade setup, and then identifying 1 or 2 to target and hit for those trades if those patterns complete and give you entry criteria met so that you can enter the market, put a stop loss in place, a profit target, lock in the money, and get off the screen. The Day Zero setup is when we get a peak formation high and low, and then the consolidation inside for a parabolic trade setup. Now, coming back to gold, we talked about this yesterday. We had the false break at the beginning of the week. That typically starts off our day count at the higher low of the week. Day 1 being the peak formation high. That breakout failed, but that also, when breakout traders are triggered into the market, we know that their stop losses may be potentially at the other side of that day's range that is broken out of. Now, we're talking about other time frame traders. We're talking about maximal loss potential, margining out traders' accounts that are holding on to a loser. I get this question all the time. Why would somebody hold on to that? Because they don't want to take the loss. This is what happens to retail traders. This is how many of them will average into a losing trade and ultimately get their arm bent so far that they have to close it out, or it margins them out and blows out their trading account. So we get the false break that starts our day count. Then we had our first red day, and we had Day 1 shorts in the market at the break of Monday's low. Now, another question I received, which was an excellent question, is Day 3 shorts and longs, does that have to happen on a Day 3? That is a completely different trade setup. 3 days of breakout traders can take 5 days to happen. It can take 4 days to happen. It is different than a 3-day setup. A 3-day setup is exactly what we saw yesterday on pretty much every instrument. But Day 3 breakouts in the market is a different setup also. So we have Day 1 breakout traders in the market that gave us a high of day selling opportunity in the US session that continued for a Day 3 blow-off capitulation and reversal on Wednesday. But that breakout also failed and came back, getting the London traders, the Europe Open traders who were long right at the open of the session, stopping them out into the end of the day. But it also gave us a first red day. Now, another excellent question was, I thought our first red day was on Monday. Perfect observation, but we also had a failed breakout that took out the high of Tuesday, went into the peak formation stop hunt at the high of our week, and failed and closed below the open. First red day has a pump up day and a day that closes below the open. Sometimes this can be a reset. The thesis on this trade was that it would blow off not only to the low of the US session and the low of the day, but potentially through to the low of the week. Now, that did not happen. That was a quick, easy, low stress 40 pip move right at the open of the Asian session. The screenshot is in the community post. That was 3 levels of rise, a break in structure, and a pump up at the open, and an engulfment into the peak formation for a vertical 40 pip move that was over in 15 minutes. A zero stress Asian session high of day short trade. That market then reversed and proceeded to trade and put a high of day in place prior to our Europe Open. So another excellent question that I received is, how do you know that the higher of the day is locked in at 1:59 a.m. New York time? I don't, but before Europe opens, that is the high. Let me zoom in on this. At 1:59 a.m., that is the high of the day, right here, of the current day. Now that is different than yesterday's high and low. We're inside of the range, but that is the high of the day. The market then breaks out and pulls back. We talk about the three things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse. Or they stay range bound between a high and a low in a trading range, which we saw on the euro. Now this market breaks out and pulls back and then puts in a low of the session, which becomes the low of the day for the London session. Coming into the US 12 candle window, just prior to 8 a.m. New York time, we opened down right at the low of the London session, right here. We have a peak formation, low of the day of Asia, and a peak formation, high of the day of London. Peak formation high, peak formation low. We talk about this in the playbook. Parabolic session trade setup. They can be trend trades or reversal trades. No major news release on the schedule. If there is, we would use the first bounce. Setups are using the 15-minute charts. Now, in simple terms, we also talk about the 100 pip boxes. This first red day setup in Asia worked, but then the market reversed and took out the high of the day and continued to go higher. Peak formation low and peak formation high. That is the recipe for the day zero setup. Then we need a sideways consolidation for the explosive parabolic move. We have a low of the session. When we have a low put in place, peak formation low, peak formation high, and then a low of the session, start counting the pushes. 1, 2, break in structure, higher high. So we'll draw this out, and I repeat this over and over again. I will continue to say this: a break of structure on the inside. Think dump and pump. No major red news on the schedule. 1 push, 2 pushes into the low, higher high, second hour about to open, and the continuation short squeeze parabolic trend trade in the US session. Now we're inside of the low and the high of the week. We have the high of Wednesday and we have the high of Monday. Now coming back and looking at our double zero boxes, we are in a 100 pip box that breaks out into the next box, higher high, pulls back, and trades back into the low with higher high break in structure, higher low, higher high, the pullback, New York Open, second hour for the explosive parabolic trend trade. That is the day zero setup. This market will not come back. Coming back to our geometrical structure, we have a high-low rectangle, 3 levels of drop. We can just take the high and low to project a profit target. We can use the bodies. We can use the numbers. It doesn't matter. This is a all-in trade setup. The parabolic trend trade, just put our numbers on there, for at least 2 100% expansions of the range. The high of the week was up top. It continued another 50 pips above the high of the week. And again, I reinforce the importance of understanding timing. 1 hour, putting in a high and a low, right at the end of the first hour, at the bottom of a 100 pip box, we have our entry, which aligns perfectly with our 5-minute entry criteria in the playbook for an explosive parabolic zero stress all-in trade opportunity. And again, you'll notice the pushes down. 1, 2, 3, higher high, Pull back at the end of the hour for the explosive parabolic trade at the bottom of a 100 pip box. Breakout, pullback, continuation trade back through the high of the week. Low of the session, high of the day, high of the week. So keep it simple, traders. Study these templates. Don't try to fit an instrument and trade one instrument every single day and figure out every little tactic that the market is moving back and forth. Identify the highest probability opportunities. Understand how that should set up based with your thesis. Understand the importance of timing. And then when you have your entry pattern complete, how you will manage your risk and whether or not this is a trade set up just to take a scalp out of the market, or if it has sizable potential to continue, where you may take partials out and where you may hold on for the entire ride. Keep it simple, traders. Everything is as simple as we want to make it. Do not trade manipulation and deceit. Understand exactly what you are looking for. Keep it going, keep it growing, and may the markets go with you.